Good afternoon. Hello there, everybody, and welcome to our Monday afternoon Active Trades webinar, Monday Market Matters. Here, 8th of July 2024. Paul here with you for the next hour. Great to have you here with us today for an interesting discussion, which is really all about, is trading an art or a science? So what are we going to talk about today? Well, as usual, we'll go through our usual Monday Market Matters in terms of having a look at the news and what's coming on. It's been a rather interesting week, and I think it's going to be an interesting week ahead for us as traders. But as I said, we're going to talk about, is trading an art or a science? And we'll have a chat about, why has this debate raged for so long? We'll talk about how we define which parts of trading are art and which parts are science. And finally, we'll ask the question, can we claim to know which one trading truly is? And I will be sharing my own views, my own opinions. They are my own personal views and opinions from having traded for many years and from working with traders for many years as well. So hopefully that will help you in terms of understanding your own view, your own beliefs, and your own understanding. Okay, so it's, as I said, it becomes quite an interesting topic, an interesting conversation, something we can talk about for a long time, but it might be just something that, perhaps, you're just starting out on your journey. And just a chance to sort of understand and take a look at trading from a different angle. Then, as always, we will finish off with a check on the live market, see how the markets are opening. Okay, as we go into the start of the US session in about 25 minutes' time. For those who don't know me, my name is Paul. Traded for many years. Okay, traded for funds, traded for clients. Primarily, I like to trade FX indices and commodities, and I tend to be a trend trader for longer-term swing and position trades. And I tend to focus on mean reversion and reversal trade setups for my shorter-term intraday trading. So it's a case of, as I said, when it comes to trading, whether it's an art or a science, I have my own views and opinions on that. And as we go deeper into our session today, I'll be very happy to share them with you and share my own opinion. Remember, that's just my own opinion. As I said, one of the great things about trading is that everybody can have their own particular opinion. Ultimately, that's what makes a market, okay, and that's what we're interested in. So it would be interesting to know of those of you here in the room, just taking a snapshot today, okay, in this moment before we start, what do you believe trading to be? Do you believe trading is an art, or do you believe trading is a science? And you can just put that in the chat box, okay? There's no right or wrong answer, okay? Not at all. It is more about understanding, where you're coming from, all right? And as I said, this is a chance to sort of pause, all right? Take a moment and actually just examine your own beliefs about trading, your own understanding, your own insight, because that can help you. It might not necessarily right away, but the deeper you understand your own view of markets and your own beliefs about trading, the better you'll be able to sort of, evolve and develop as a trader in your own journey. So Simon says, my wishful side wants to consider it as a science, as that would mean that it can be taught and studied objectively. Thank you for that, Simon. All right, that's great insight. Okay, it's a very valid and interesting view. Okay, absolutely valid opinion. As I said, there's no right or wrong. It's about understanding what your own views are. Okay, and with all of these sessions, okay, I appreciate we have a true range of experience of people who join us, from people at the very, very start of their journey who might not really understand why we're talking about whether trading is an art or science, to those who've traded for many years and realize the sort of, let's say, they kind of deeper philosophical questions about it, and want to understand that at a deeper level. So you're absolutely right, Simon. Okay, that I can understand why you'd like to think of it as a science, so it could be taught objectively. So let's just hold on to that, and we can come back to it and have a little conversation about it at the end of a session. So Daphne said, I know it's best performed as rules-based, but think an element of art creeps in with experience. That's a really good take as well, Daphne. Okay, well, we'll wait till later on this session, okay, to give my own particular views, whether they differ or are in alignment with your own. But thank you for that really good take. And Sandeep says trading is about the art of choosing the right value price on the base of science calculation of the analysing the quote, and that's a valid and interesting take as well, Sandeep. Okay, thank you for sharing that. As I said, there's no right or wrong. It is about an opinion, but sometimes even just having to answer that question will help you understand your own view on it, okay, and what you may have been taught or what you may have read and what you might actually believe from who you are, your own character, your own personality, your own experience of trading could be very different, and understanding them can be really beneficial as a trader. So yeah, some fantastic takes there. Really appreciate that. Thank you very much. So we'll come back to that in a moment. Maybe we'll ask the same question at the end of our session. But as always, we're here for Monday Market Matters, which is ActivTrades weekly session to help traders just start the week in the right frame as we look at the opening of the US market in what's then about 22 minutes. So every Monday, 2 o'clock London time, we take a look at the news. We go into a piece on education, which is today all about art, or is trading an art or a science. Always have a little look at the ActivTrades platforms and tools that you have available to yourself as an ActivTrades client, and we finish with a look at the live markets at the start of the US session. So there is always plenty for us to cover. There's always lots for us to discuss, and and so we'll crack on with that. And as I say, we always start out with just a little look at the news, and I say this every week, and I make no apologies for it. It's just a repetition of best practice, namely that if you are very new to trading, okay, if you're at the start of your trading journey, I do not expect you to be able to analyze and understand economic data. But it is very important for you to know when that economic data is coming out, okay, because it'll induce volatility into the markets, and volatility is very much a double-edged sword, okay. When you're on the right side of it, it's fantastic and you can ride it. When you're on the wrong side of it, it can make trading challenging. So it is crucially important to know when those big bits of economic data are coming out. You can find that out on an economic calendar. There is an economic calendar on the ActivTrades website. Okay, you can find it there. You can also find ones elsewhere. So there's no excuse, all right, not to be able to understand and find out when the news is coming out for this particular week. So we've had an interesting week. The last week was some interesting economic data. Okay, so last week we had things like the American non-farm payrolls on Friday. We had FOMC minutes. Okay, we also had political events in terms of the UK election last Thursday, and then of course the French second election yesterday. All of which kind of filter into some of the volatility or some might say some of the lack of volatility that we might have seen in markets over the last few days. But this week is very much, I would suggest, is very much a US centric week in terms of the sort of data that's coming out. What we have is tomorrow and Wednesday, we've got head of the Federal Reserve, Mr. Powell. He gives his annual testimony to Congress, so that will be on Tuesday and Wednesday. And of course, traders will be interested to pick up anything they can from his discussions and conversations there. We also have sort of Tuesday night going into Wednesday. What I'm interested in is we've got the New Zealand dollar, their Royal Bank of New Zealand, their rate statement, their interest rate statement. And whilst nobody's really expecting a major change, people will be interested to hear what they've got to say and to understand maybe the narrative with basically the New Zealand dollar. On Wednesday, okay, not only do we have all of that data, but then when we move into Thursday, we've got, as I said, US-centric week in terms of we've got the US dollar, impacting the US dollar and the US markets is the core CPI data that will be coming out, core inflation rates, and on Friday we'll have the PPI data and also the preliminary consumer sentiment. Closer to home in the UK, we have GDP, our UK GDP Thursday, on Thursday morning, and invariably what we will probably see after the change in parties, political parties at the end of last week, undoubtedly as the new political party get their sort of feet under the desk and start to reward their backers and sponsors, we will find that they will be making announcements in terms of what they're looking for, and that undoubtedly might have an impact on UK markets. So whilst there is a lot of formal data coming out of the US this week, just be aware of the information that comes out of the UK and France. Okay, of course they have their election, and just what impact that might have upon both sterling pairs, UK stocks, but also the euro region as well. So so there's plenty going on, right? Lots for us to keep an eye on and to look at, and lots that traders will be interested to see how it impacts markets going forward as we go into what are normally quiet summer months. But I think as we run up towards the US elections in November, it might not be as quiet a summer as we are normally used to. So, having looked at the news, let's have a chat about some, education element that can actually help you understand your journey, help you improve your trading and evolve as a trader, which is something we're always doing. Okay, it doesn't matter whether you've been trading for 2 weeks or 2 decades, you're always working on evolving to being the best trader you possibly can be. Okay, and that's just part of being a good trader, which you want to embrace and run with. But with regards to what we're talking about here today, is trading an art or a science? Well, I think it's fair to say that debate has raged on for a long time, and for as long as I've been involved in trading, there has always been that conversation going on at the background, whether it be at an intellectual level at trading conferences, or whether it's just a few traders over a coffee or over a drink somewhere. Okay, just really about debating about whether it is an art or a science. Now, of course, when we look at modern markets and how they operate today, it might be said that with the increasing use of algos within the markets, within algorithmic trading having grown so massively, maybe that is an indication that we've finally realised that trading is merely a science-based endeavour. I suppose the question would be, would you agree with that? Or on the flip side, maybe it's merely showing us how exceptional some human traders really are, that they are still able to trade well in that environment, and also to trade better than many algos. So today what we'll do is we'll discuss whether trading is an art or whether it is a science, and most importantly, look at how it reflects upon your own trading. Because I appreciate that we can have very nice philosophical debates and all that, and that's lovely, but ultimately you want to know, well, actually, how is this going to help me? All right, what does this bring to me? How does this move me forward as a trader? How does this make me better as a trader? And that's ultimately what we're particularly looking at. So more of that later, okay? And I will be talking about how it impacts every one of us, so that you can sort of understand it at a deeper level and take it away for your own trading journey. So let me pause a few questions, okay? And let me just sort of offer you up a few elements to maybe consider and take a moment to think about. So I've got a few photos of elements up here, okay? And I'd probably ask you, whether you believe them to be the work of an art or the work of a science. So if you look at Concorde, the supersonic airliner, no longer with us, would you define that as a work of art or a work of science? The Apple iPhone or the smartphone that you have in your hand, is that a work of art or is that a work of a science? Leonardo da Vinci there in the middle, was he an artist or was he a scientist? How would you define him? For those of you who might be petrol heads and love cars, if you look at something like that, that's an old Jaguar E-Type, would you define that as a work of art or a work of science? Or even in the bottom right, the sort of late great Jimi Hendrix playing guitar, is that a work of art or is that him working as a scientist? I just want you to just pause these questions just for you to stop and take a moment to consider it. Maybe you do give these things consideration. Maybe it's never crossed your mind before because you've been focused on other elements. But take a moment, maybe, you know, in the chat box, maybe you might have a view on these things, maybe you have a thought. Okay, maybe you might be saying, well, you know, what relevance does that have to trading? But bear with me, you know, it's all part of actually understanding the kind of the ecosystem that builds up around trading, and you know, we'll go deeper into that in a few slides time. So, as I said, just take a moment to consider them. Do you believe them to be arts, or do you believe them to be works of science? And once again, there's no right or wrong answer. It is about your opinion. But even in understanding your own answer, your own opinion, that is telling you an awful lot about where you're coming from. It's all telling an awful lot about how your brain works, how your brain looks at this information. And that is ultimately very, very useful to you as a trader. Now, it is very useful to get an insight into how you view the world, how you view markets, how you view yourself, all of which is unbelievably useful. And at the start of your trading career, I appreciate you might not necessarily recognize that, you might not understand it, you might be thinking, you know, what's this got to do with me trying to trade NVIDIA put? But actually, as you go deeper into it and understand it, you'll realize, okay, you know, how it applies to you, and actually how you can use it to your own advantage. So, you know, having just thought about those particular individual elements, about whether they are arts, works of art, or whether they are, you know, work of science, then the question becomes about trading itself. Okay, you know, whether you think it's an art or a science. And you know, we had some good insight there, some good opinions there from, I think it was from Sandeep and Daphne and Simon. Okay, you know, and as I said, it's something to take a moment and give some consideration to. You know, maybe you never have. Okay, that's fine. You know, this is almost think of it like a kind of a moment to take pause and consider that, because you know, as you go deeper into your trading journey, these are the sort of questions that will start to come up repeatedly, and part of it is about understanding that and understanding its absolute relevance to not only trading in general, but to you in the way you look to and choose to engage with markets. I've got a few more questions for you. Okay, you know, I appreciate that it's a Monday afternoon and you might have been hoping for just an easy, quiet afternoon, but I do have some questions for you. You might have to exercise a few brain cells just to consider. So, in the old days, of course, you know, the vast majority of trading would have been taken care of in the major pits, in the trading pits, whether that be you know, London, New York, Tokyo, elsewhere. You know, back in the day, pretty much every town, okay, every sort of major city would have its own trading exchange of one sort or another. And so, you know, even just thinking about the old pit traders, maybe you've seen old movies, maybe you've watched movies like Trading Places, okay, which is one of my favorite movies, right, where you see that, and then you have to think about, you know, those guys and girls operate in the pits. What do you believe them to be? You know, were they artists or were they scientists? You know, just take a moment to consider that. How would you view them? Okay, would you view them as artists or would you view them as scientists? You know, because actually, even as I said, just even thinking about it starts to bring up all sorts of different ideas and thoughts about how you view trading. And it is, you know, the more you understand how you view trading, the more you are able to position yourself to work in alignment with yourself rather than fighting yourself. And what might appear to be at the other end of the spectrum. So, you know, high frequency traders, okay, using algorithms, as we sort of talked about a little bit. What do you believe them to be? Do you believe them to be artists or do you believe them to be scientists? Okay, some might say writing code is a form of art. Okay, some might say that. Others might say, well, it is just a purely scientific method of engaging with markets. You know, and as I said, you're very welcome to your own opinions. Let's face it, having all those own opinions is what makes a market, and that's what we particularly want to look at and understand. But, you know, have you given some consideration towards that? Have you thought about the impact that might have on markets and the way you view them? So here's another question for you. Fundamental analysis, okay? Fundamental analysis of markets, okay? You know, when you look at that, Daphne says that algo coders, scientists, open cry traders, neither artists nor scientists. There you go. That sounds like someone who speaks from experience, Daphne. there. Okay, so it is basically, yeah. If you've spent any time with pit traders, you might, you might not necessarily call them, well, not artists in a good way, or a particular scientist, but invariably, thinking about how they operate is one of those ways. But here we go. Here's a question about fundamental analysis. All right, fundamental analysis, the definition there, method of evaluating a security that entails attempting to measure its intrinsic value by examining related economic, financial, and other qualitative and quantitative factors. Would you believe that fundamental analysis is an art or is it a science? What would you consider that to be? What would your particular view on that? Would that how would you define that? Think about that and stuff for that particular moment. So Sandeep says he believes that fundamental analysis is a science. So do you agree with him? Okay, as I said, there's no right or wrong. It's about learning and understanding who you are. Do you believe that to be right? Do you believe that to be wrong? Do you believe that something different? That's absolutely fine. All right, that's absolutely fine. As I said, we're always fascinated to understand. Okay, how that particularly works and what your view is. We're always interested in that. So Daphne said maths-based, so definitely a science. Eric says it's an art. Okay, that's absolutely great. I really appreciate the insight. Really appreciate the kind of contribution. I really appreciate everybody's different view. As I said, there's not necessarily a right or wrong. It's about understanding how you view the world and how you view markets, because that can actually be of help to you. So most of the people, not everybody, Eric's different, but most of the people think that fundamental analysis is a work of science. So let's go to technical analysis, okay? Looking at charts, the analysis of past price changes in the hope of forecasting future price changes. When you look at that, what would you say? Would you say technical analysis, when you do that on your charts, is that an art or is that a science? Okay, that will be interesting to see. So Simon says, because analysing the market ultimately produces an individual decision, whether it's a short or long, the decision-making side of trading could be considered an art. That's a very interesting take, Simon. All right, very interesting take. And I wouldn't necessarily disagree with you there. Eric says he believes technical analysis to be a science. Daphne, says she thinks it's a science. Okay, you can apply Fibonacci, etc. So once again, it's maths based, and that's a fascinating insight. Okay, as to how people can actually look at it and how people can view it as whether it's an art or a science. And that's the sort of, as I said, this is the whole thing about taking a pause to sort of consider, what are your beliefs about trading? Okay, what are your beliefs about fundamental analysis, technical analysis, how you operate as a trader? And that's the kind of the deeper, longer term question that we're pitching there, but some absolutely fantastic. Okay, absolutely fantastic. So Eric says trading is a combination of both. All right, well, let's just wait a slide or two on that, Eric. Okay, but I appreciate your contribution. It's great to have everybody's thoughts on that, how they're viewing it. With all that well and good, then of course, it's clear that I have to express my own view as well. All right, okay. Is trading an art or a science? And as the caricature sort of sees there, I am very, very much, most definitely sat on the fence here. Okay, I believe both trading is both an art and a science. And that is my personal opinion. As I said, everybody's very welcome to their opinion. That's what makes a market, isn't it? But I'll explain my view of why I believe trading is both an art and a science, and actually how it reflects the way we engage with markets, and actually how we can use that to help us be better traders. Because ultimately, that's actually all we want to be, isn't it? We can do all the work, we can do all the intellectual questioning and view, but ultimately, we want to know, how can I be a better trader, Paul? All right, what's going to make me a better trader? And that's actually ultimately what we're all looking for. And I will share with that and talk about how I view it, and also share some of my experiences from basically my own experience of trading for funds, trading for clients, and also being on trading floors and helping coach and teach traders, and that I'll share my views through from that. I've always liked, for this, in my view, I've always particularly liked this quote from Mr. Derman, who used to be the head of quantitative strategies at Goldman Sachs. Okay, and that's his job, head of quantitative strategies. It's a great quote. In physics, you're playing against God, who does not change his mind very often. In finance, you are playing against God's creatures, whose feelings are ephemeral, at best unstable, and the news on which they are based keeps streaming in. I would agree with that. Okay, I would agree with that. Is that whilst there are some really fantastic maths-based, science-based elements to trading, whenever you have humans involved, that can be both the best and the worst cases and examples in that, and I'm going to talk more about that. Okay, and I'll talk about how it reflects onto general traders in terms of how they work and look. So V says, recently enjoyed the Rogue Trader story of Trader bringing down Baring Brothers. Yes, that's that's right. Okay, that's it's a good film to watch. Rogue Trader, what's his name, Mr. McGregor in there and stuff. He used to work with his brother many years ago. That's a different story. And he, of course, is playing the trader who brought down Barings Bank at the end of the 90s. And I'm not entirely convinced anybody would call him either a scientist or an artist, but that's a different story for a different day. But my view is that does give you an insight into what I was just saying there, is that once human beings involved, then invariably that can become unstable, and you can see the best and the worst of human behavior. And that in itself has an impact upon markets, and I'm going to go more into that in the next couple of slides. As I said, I believe that trading is both an art and a science. And to help me kind of explain that and what my view is, I'm going to use this slide, which I've shown before, which is about the 5 steps to becoming a competent trader. Now, this is where I believe that science is the building block towards developing conscious competence. So stage 1, at the first start of your trading journey, you are unconsciously incompetent. You're doing the wrong things, but you don't know why you're doing the wrong things because you don't know enough about trading and markets. Okay, so you make mistakes, but you don't actually know why you're making mistakes. As you go on as a trader, okay, as you develop in a trader, you go to stage 2, which is conscious incompetence. Namely, you are making mistakes, but you know you're making mistakes. You might not fully understand the reason you're making mistakes, but you are conscious of the fact that you are making mistakes, okay, and not achieving the outcomes that you're looking for. What generally tends to happen is that there is a eureka moment, okay, a eureka moment, and if I was to go into a deeper conversation, normally eureka moments, they don't happen on your own. They happen because you're in an environment that basically, either with an individual or an organization, that helps you have that eureka moment, that helps you make the leap. Okay, you make the leap from conscious incompetence to conscious competence. Namely, conscious competence as a trader, I would describe, you're trading well, you're understanding well, you're following your rules, you're following your plans, okay, but you have to work at your trading. Okay, you have to work hard at it. And it's only when you get to step 5 where you're at a position of unconscious competence. Namely, you are trading well, but it feels like it's almost on autopilot. And if you think about that, that is there's kind of, let's say, 5 stages as a trader. If you think about that in, let's say, in other endeavors, so let's say learning to drive a car, all right, you're unconsciously incompetent, you don't really know, you're making mistakes, you don't really know what you're doing, you don't really know what you're doing wrong. Then, if you're driving a car, okay, your conscious competences know that you are making mistakes as a driver, and you're aware that you are making mistakes. And then you have a eureka moment. And normally that eureka moment when you're learning to drive, because you're actually working with a driving instructor and they are showing you where you are making those mistakes so that you're in a position to basically to eradicate those mistakes. And that is what helps you make the leap from conscious incompetence to conscious competence. You know, you're able to drive the car, okay? You're able to drive the car safely, okay? You're able to control the vehicle safely, and you're actually able to drive. But you have to work at it. You have to focus at it. You can't relax. You can't, you can't take your, you literally can't take your hands off the wheel or your eyes off the road. And then all of you, if you've been driving for a few years, will get to a point where you experience unconscious competence. Namely, you can almost, you might get in the car, take off, drive, and then next thing you know, you're at your home or your location, and you've not really you don't even really remember the journey because you've been operating at a level of unconscious competence. All right, and I'm sure all of you will have experienced that. Let's say your driving experience, your driving careers, and that's the same with the traders. So what does that have to do with art and science? Well, my view is that science is those building blocks, okay? It's the building blocks that you have to work at towards conscious competence. So when it comes to trading, what are those building blocks? Those building blocks are primarily, first and foremost, managing risk. Okay, managing risk. That is the science. There should not be any art involved in your risk management. Okay, at the beginning of your trading journey, managing risk, making sure that you never trade without stop loss, making sure that you're only position size so that you're only risking a small part of your capital. These are the things that that they are, as I said, they're almost like scientific. They are building blocks towards developing conscious competence. The way you do your analysis to begin with should be a process. It should be following a process. Okay, I would view that as as science. Okay, following that process to make sure that you're having to work at being consciously competent in what you do as a trader. However, the longer you do it, okay, the further you go in your trading career, the more it becomes unconscious competence. It's the artist who becomes unconsciously competent. So here's a very local and apt example. Most of you might have, even if you don't love football, you'll know that the Euro Championships are on at the moment. One of the things that I would suggest about it, and this is once again my personal view, is that actually the football is a little bit dull. Okay, for all the nations, the football's a little bit dull. It's a little bit boring. It has become quite prosaic, quite sort of process driven. And my view would be is that actually we are, the football teams now are driven to such a level of, let's say, the science of the sport, the science of coaching, the science of the strategies and tactics they use, that invariably it crushes the artist. It crushes the artist. From 20 years ago, where you would see the likes of Ronaldinho and Zidane and other fantastic footballers, these days we tend to have more very fit robots rather than the artists you might have seen. Now, some people might disagree with me on that, and that's absolutely fine. That's opinions, okay? But as I said, my view is that trading is both an art and science because you need to have the building blocks in there, to develop towards conscious competence. They are all scientific building blocks. And if you do not put those building blocks in place, well, then it doesn't matter how good you might think of yourself as a trading artist. The reality is you're never going anywhere as a trader. If you're not doing that managing risk, okay, if you're not doing, you're basically following processes, etc., at the beginning of your trading journey, well, then, as I said, you will never get the opportunity to see that artistic side of you flourish as you develop in skills, experience, confidence, and belief. So, does that make sense to you? Do you disagree? Maybe you think, I'm not sure that's for me, or, that's absolutely fine. But as I said, from my years of experience of trading for myself and working with traders, okay, this is what I see time and time again, okay, and that's the way we particularly look at it. So Eric says he agrees. Okay, Simon says makes perfect sense. Thank you. That's good to hear. So part of it is, undoubtedly, the word is interpretation, okay? And where and when that interpretation is suitable depends upon whether it's an art or a science. So my view would be when it comes to your managing risk, okay? So, basically never trade without stop loss, never risking more than a small portion of your account. There is no interpretation into that. Okay, there is no interpretation. There are rules, and these rules follow because, like scientific principles, okay, you might be able to bend them a little, but you can't but you can't break them. They become the kind of the almost like the guide rails that drive you in the right direction. Whereas when there is an element of interpretation, and I would suggest when you're doing things like your analysis, okay, so there is an element of interpretation, and that's where it becomes, the artist side of you becomes more prevalent. So, for example, a simple example of that in trading is trend lines, okay? So, at the start of trading journeys, I generally tend not to suggest or teach people about trend lines. That's not to say they can't be very, very useful, but they're very easy to interpret because people draw them from different levels, as opposed to horizontal levels of support resistance, big round numbers like, you might see on Bitcoin, like breaking 60,000 last week, big round numbers, there is no interpretation there. So if there is an interpretation, if you're interpreting something, it's more on the art side. If you are just following simple rules, well, then my definition would be that it is more, it's more of a science. And as I said, you're managing risk. That is the key building block. If you're not putting in that, let's say that scientific building block, doesn't matter how great an artist you think you are, you will not survive long enough to let that skill and that side of you flourish. This is one of the reasons why I talk to traders about the 4 M's of trading. Namely, you need to understand markets, method, money, and myself. So, and what I suggest to traders is that basically in terms of what I find constantly is that everybody's looking for that sweet spot. And what I mean by that is that when I see traders doing well and consistently well, it is normally because they have managed they are managing and leading in terms of their markets, their method, their money, and myself. But what I suggest to new traders is that when it comes to the money side, okay, and the market side in terms of your start of your analysis, they should be treated like science, okay? There should be rules in place, there should be processes in place that make sure that you are doing the right things to put the right building blocks in. Even, I would suggest to begin with methodical trading, mechanical trading. I would describe that as, being able to just follow a simple mechanical trading system. That would be, to me, that would be more about being a scientist. It is actually, as you develop as a trader, you develop confidence and experience, and your belief grows. That is where the artistic side of you starts to come to the fore. That is where we see traders developing their own method. That is where they see them understanding their own psychology and being able to find ways to mitigate their weaknesses, because everybody has them, and then finding ways to leverage their strengths as well. So Simon says, would you recommend any mechanical trading systems that you could back test? There are a few very simple ones, and as you say, you're absolutely right. That's a topic for a different lesson, and I'll take that on board, and we'll build that into a future plan of different mechanical trading systems you can take on board, Simon. So, but good question. All right, good question. So, I'm not finished with asking you questions to consider and to give some thought to. So, let's have a think about what might be the difference here. So on the left, we have, my personal trading hero, Paul Tudor-Jones, and then on the right we have let's just say that's an image to define a black box trading system, basically switch on. What would you believe is the difference between the pair of them? Okay, what do you think is the difference between a black box algo trading system, right, that you literally turn on and let go? Or what's the difference for that from, let's say, Paul Tudor-Jones, who's a market wizard, who has been unbelievably successful over his trading career? People might sort of look at, well, what is the difference? Okay, they might be able to see very superficially that they are completely different in the way they look and they operate and they act. Simon says one's a human, therefore susceptible to human-like qualities. That in itself is very true, Simon. Okay, very true indeed. But what we see is, okay, in terms of what's the difference is, when you're working with funds, okay, especially funds that's usual manual discretionary traders, they focus on the collection of copious metrics on traders who employ discretionary judgment. From these metrics, it's possible to determine which traders are achieving results beyond their peers and beyond what would be expectable by look. And so funds trace the outcome of their discretionary traders and allocate more capital to their all-stars. So even traders who are using discretionary judgment in terms of how they operate markets, good funds, and this is what I try to get across to all traders, is that they're focusing on the collection of those copious metrics. And I believe it's those metrics, once again, that's the kind of, you are melding the art and the science, okay? It's only by collecting the metrics on those traders that you are able to understand them better and to understand how they flourish as, let's say, as a trading arm. But it's all off the back of copious metrics. And as it says there, and I've experienced this myself, is that, then basically funds are in a position to allocate more of their funds to their really good traders and reduce, okay, the allocation to let's say traders who are struggling or underperforming. Whereas on the flip side, okay, when we're looking at, let's say, a black box trading system, funds will use the development of automated trading systems based upon back-tested historical patterns in the markets. Those address the need for scientific money management by eliminating as much of the human element of trading as possible. Their mechanical trading systems are the equivalent of the therapist's evidence-based treatment manual. So in many ways, okay, people might say, well, Paul, actually what I just want to do is, it's clear that I just want to create, black box algos that trade the markets. But what you have to remember is, and take on board, is firstly, even those that are programmed, okay, they're programmed by humans. So invariably they are bringing human biases into their trading models. Also, very often, and I'd say even still to this day, is that markets change, okay? Markets change, and it is the human ability to change, to recognize that change in the market, that is actually one of the edges that human traders still have. Whereas what we generally tend to find is that increasingly, when you have days, crash days, or whether it's even the start of moves now, very often what has happened is that basically there has been a change in the market environment, and that black box algo worked exceptionally well in the previous market environment, but the market has changed and they have not got the ability to change in that market until they are recoded. So there are both pros and cons to both sides, okay? And as I said, superficially, people might say that they just want a black box algo that can turn on and switch, but the reality is actually very different. And it's in that reality that is actually what provides opportunity for really very, very good human discretionary traders. So what you tend to find is that quite often these funds is that, once they start treating traders as trading systems and objectively measure their performance, the dichotomy between what is scientific and what is, let's say, artistic subjective starts to fall away. All right, subjective methods in trading are objectively valid if they can be shown to produce results beyond those expectable by chance. And it's hence why understanding your metrics is absolutely key as a trader. And those who know me, those who've been coming to these sessions, I'm always reaffirming how it is important to basically manage risk, but also to keep great records and to understand your metrics, because it's doing those things that is where the science and the art come together. That is where you as a trader can develop the best side of you as a trader and develop the best performance that you can as a trader. And it is those sort of things, managing risk and keeping good records. These are the things that will accelerate your progress as a trader faster than anything else. And that's what I'd like you to take away. And hopefully we've just talked about the ways and means that you can do that to use this to help you be a better trader. Before we kind of switch across to the charts, just the takeaways that I would have you take on board. My belief is that trading is both an art and a science. Your analysis becomes an art form, okay, eventually. Your trading decisions may become an art form as well. However, your risk management is a science, and your metrics, okay, making sure you're building them, make sure you're understanding them, reviewing them, implementing them. Those metrics, they are a science. And it is by combining both that you become the best version of yourself as a trader. I truly believe that, okay? I believe that from my own training experience, from having, as I said, coached, mentored, worked alongside all sorts of, traders in all sorts of environments. By combining both the art and the science, that is how you become the best version of your trading self. And that's ultimately what I'd like for you. That's what I'd like for you. And hopefully you can get an insight into what you need to be doing, okay? Making sure you're on top of your risk management, making sure you're on top of capturing your metrics and understanding those metrics, and by out of that is how you create the situation, you create the environment for your artist side to flourish, okay, in terms of your analysis of markets and also your trading decisions. Ultimately, trading is, in my opinion, it's both an art and a science, and you need to develop the skills, and then the skills become your habit. And in that process, you develop a feel for the markets, and that is when trading becomes an art. A lot of it depends upon interpretation. I would suggest, okay, both technical and fundamental analysis, they are both arts because they depend upon interpretation. However, your risk management should not be open to interpretation in any way at all. It's the scientific building block upon which everything should be built as part of your trading journey. And so for you, the trader, well, you can be both the artist and the scientist in your own trading. And actually, it is perfectly possible for you to become the black box. You can become the black box when the right principles are applied to your trading. I hope that give you a little bit of insight and give you a little bit of something to take away and to consider and to think about. Just remember that Monday Market Matters is here to support you in what is going to be an interesting second half of 2024. We'll always look at news, education, active trades, tools and markets. And as I said, it's going to be an interesting year, okay? I think that we are not done with the volatility, and I hope that you will join us to enjoy the journey. And so with that in mind, why don't we switch across the charts and have a little look at how the markets are setting up for this particular week. Just a reminder that next Monday is our next Monday Market Matters webinar, London 2:00 time, and in that session we're going to be focusing on the engulfing candle setup for our education piece. So I hope you'll join for that. If you're not already registered on the website, the QR code there is to there help you. If you've got any questions or comments, you can always email englishdesk@activetrades.com. If you've got feedback, or if you've got topics that you would like to see me touch on in the future, by all means drop them in there and they'll happily pass them on, okay, and we can take that on board. So just bear with me for a moment and we'll switch across the markets and see how they've set up now that the US sessions has begun. Okay, so just looking at the profile. So this is my dollar profile. We'll start off. Let's always have a little look at what the dollar's showing us, because that in itself can be really helpful stuff. Eric says thank you for an interesting webinar. You're very welcome, Eric. I hope it's given you a little bit of a food for thought. So primarily I like to look at the FX markets. So if I'm going to look at FX markets, I always want to know what the dollar's doing. This is the dollar index. It's the weekly chart. So each of the candles a week, we can see that we had been mostly bullish, getting up back towards the highs of the year. We talked about a week or so ago about how we'd had a bit of a doji there. Okay, some people might describe that in different ways. Okay, but some people might call that a gravestone. Some people might call that a dragonfly. Either way, it's a bit of indecision. And then what we can see is last week, we actually rolled our way over there. And if I look on the dollar, on the daily chart, okay, what you can see is, Tuesday we turned around. Tuesday, having hit the highs. Tuesday we turned around, and then basically last week we just continued to sell off there, bang, bang, bang. And if I go down even one more, the 4-hour chart, we pushed up to begin the week, filled the gap, then rolled around and fell ourselves away, and then we were left. This was the kind of the volatility from non-farm payrolls. So you can see how that happened, and we're not surprisingly we're back down to sort of touch the lows of that. But for the moment, that is still, I'd suggest that is a bearish trend on the dollar. Now, remember what I said, there's an awful lot of data coming in, okay, Tuesday, Wednesday, Thursday, Friday this week. So I'll be looking this week to say, does that data reinforce the bearish trend in the dollar, okay, or does it muddy the waters and start to just basically send price into consolidation? So that's where I'll be looking at, and that's where I'll be focusing at over the over the next few days. Okay, it's a dollar week. whilst we're here, if we look at bang, if I just go to this is the Aussie against the US dollar on the weekly chart, and what I've been talking about here is, if you look at that over the last couple of months, Aussie dollar has been pretty much in a sideways range bound, consolidation period. Let's just draw this in. So let me just draw this in, so hopefully it can help people just see. So, if we look at that, for most of the last 2 months, there's May, there's June. We were really in I'd be suggesting that's just a bit of a sideways box. Okay, if you're a range bound trader, that's fantastic. If you're a trend trader on positions, that might have been challenging. But interestingly, what we did see is that the 50 period moving average here was acting as dynamic support, and as dollar has weakened, well, you can see that we've, at the start of this month, we've broken out of that. We've broken out of that box there. Okay, now some people would look at that and say, technically, that's we've been going sideways and we're breaking out. Others might say fundamentally how, at a time when the world is waiting for the US Federal Reserve to start cutting rates, and the Australian World Bank of Australia, have actually stressed the opposite, name that they might have to hold rates higher for longer, and actually a rate hike is not out of their options. Okay, so maybe that has an impact on the sort of Aussie strength and dollar weakness there. And so, as a trader, what I'd be looking for is here. We've broken out of that. I'd be looking to see, does it come back and test it? All right, before it basically moves on. That's one of the scenarios that I would be looking through my own particular art, and that's the way I'd be looking at. That's the way I'd be just watching that. So it's kind of interesting. It's confirming that weakness in dollar. All right, that's been confirmed just by basically the sort of strength in the Aussie itself, and that's what we can see. We've seen across on there, as we have had. Let's have a little look at quickly for a few minutes. Let's have a quick look at what we'll do is we'll have a quick look at the euro based upon what's happened, and then we'll have a little look at the American index, see how they've opened and they've started. So what we had seen is, let me just give me 1 second. What we had seen is that this is euro against the dollar on the daily. Remember what we were just saying about how dollar weakened last week, and actually what we were seeing here, this is the euro dollar, this is the daily chart. We had seen euro weaken. We'd actually had a gap here. This is when the initial European elections, had sort of gone so poorly for Mr. Macron, and he called his snap election. And then, we gapped down, we came up and filled the gap, and then we kind of worked our way down. But then we were, after Ms. Le Pen was unable to secure a majority, we started to see a little bit of a relief rally here. Okay, a little bit of a relief, which we came back and tested very nicely, filled the gap there. Okay, and then you can see for yourself that we kind of worked our way up as it became clear that that the political parties would do what they could to basically keep Le Pen out, and that had the impact there on a little bit of a relief rally for the euro US dollar. And then overnight, this is the 30-minute chart. So you can see this volatility here. Right, that's the NFP volatility. We came back up and tested it just before we closed on Friday. This is where we closed on Friday, and this is where we opened on Sunday. Okay, Sunday evening here in Europe, but of course, Monday morning in Auckland, Sydney, Tokyo, Singapore, Hong Kong, etc. And there we had that gap. Okay, and that gap was there based upon the effect that the sort of Socialist Party, Mr. Mélenchon, his party had taken the greatest number of seats, and Mr. Macron basically was, he had not won, and also it looked like he's lost his prime minister as well. But that gap then, because the Le Pen had been knocked into third place, well, we can see that basically there was a little bit of a relief rally, and that's what we've actually seen today, where we've had a little bit of relief rally in euro, a little bit of weakness in dollar, and that is why we've seen that kind of gap fill there, and the way that has come through, and so. Just wanted to be able to basically show that, to see, so people can see how for pretty much most of the euro to start this week. We've had a little bit of a relief rally to fill the gap that happened after last night. All right, let's quickly finish last minute two on looking at the US indices on an intraday basis. So what I have here is so just the profile on US indices. This is the Dow, this is the Nasdaq, this is the Russell, this is the S&P 500. Those of you who've joined me in the past will know that I talk about how I like to see correlation. Okay, I much prefer it when I see all the indices moving in the right direction together. Also, I normally leave it for about 15 minutes after the news, not the news, the market open. So market opening, 9:30 Eastern, and variably sort of 2:30 here in the UK, but 3:30 I appreciate on mainland Europe. But give it the first 15 minutes, especially on a Monday. It can be a little bit volatile, especially if you've had a volatile weekend. Looking at that, and then look to see how that particularly plays out. Is there any particular clear direction or narrative that I want to look to work with? And clearly we can see that this is the 30-minute chart. That is the kind of the London session there, and then bang, the New York session has just really that's really been quite bullish, quite popular there. Bosch now. Have a look at that on the 5-minute chart. I think that might actually already. Yeah, have a look at that at the 1-minute chart. I'd be looking at this now here. To me, this is the 1-minute chart on the Dow, and bang, what I've been saying is, there's a head and shoulders pattern. Is it head and shoulders pattern? There's the neckline. Okay, that's also the we're looking at as the break of that there, which we are. So what I'll be looking for personally is if we're going to come back into the range, that's what I'll be looking for there. That's what I'll be watching over the next 20 minutes to see if that's what gives me an opportunity as we go into that sort of that kind of 10 a.m. to 11 a.m. New York time and watch how that plays out. Let's have a quick look at the Nasdaq. Bang, Nasdaq is more volatile today. I would suggest look at that on the 5-minute charts. Let's have a look at the 1-minute chart. So yeah, whereas the Dow had a really nice run up and head and shoulders pattern, the Nasdaq, you can see, is not looking anywhere near as kind of as clean as the Dow in my mind. Okay, want to go? I'd be looking at there's clearly buying support there. I would just, at the moment, I think it looks like it's just probably going to go sideways for the next couple of minutes. I'd watch that and then see if that supporting trend line, if that kind of supporting channel holds, or whether it breaks. S&P 500, that looks like it's had its thrust and is reversing as well. Yeah, 5-minute charts. Okay, breaks, false breakout there. Okay, of the high. Yeah, I would be looking to see if we break that VB there, and then does that go towards creating a kind of bang head and shoulders pattern to move down. That's what I'll be particularly looking at there. That's why I'll be working. But yeah, just get ready for this next hour. I think there'll be some opportunities there. And there we go. Nasdaq's already dropping. There you go. And we'll see if the others look to follow it. Okay, ladies and gentlemen, unfortunately, we ran out of time there. As they say, time flies when you're having fun. But I hope you found that useful. I hope that's given you some, a bit of pause for thought, a bit of food for thought, some questions to consider. Also a moment to think about, how you can be the best trader. Remember, build those scientific building blocks, okay, of risk management and making sure you keep your metrics, and let that be the building blocks from which all of your other trading endeavors spring from. As always, I wish you a very best trading week, and I look forward to speaking to you next Monday. Trade well, everybody. Have a great time. Cheers.